Does Tesla have more room to run? Well, I believe this one chart is telling the complete story of Tesla right now. And from when we pull a Fibonacci from the high to in 2021 to the low right here in 2023, we can see that price is establishing a new range, right? When we look at this chart, we can clearly see that the 236 right here was holding as a floor, right? And it didn't really go below it, which gave it a launch pad to shoot directly up to the 382, but it didn't stop there. And it just kept going. And now there's the bullish engulfing candle up maybe 25% for the week, shooting above the 382. And what does that really mean? Well, when we look back on the 382, we can see that the 382 was a support here, and was a support here, right? It's been a support the whole time, except for during this time right here. It was a resistance, right? But it's been a support the whole time. So this means, in my opinion, that the 382 is going to be the new floor for Tesla, and that is 221, right around that area. And which means that Tesla is now, it moved up one level, right? It's in a new trading range. It's going to be from the 382 to the zero point 0.5 fib. So that means Tesla still has more room to run when we go up to the zero point 0.5. And that is around 258, even up to maybe 260 or maybe 263 or so, just because this previous high was at 265, right? So that is a possibility to wick above. But this should be some resistance because it would still be a lower high from here. And when we look across from the zero point 0.5 all the way across, we can see it's a resistance here, was a resistance here, resistance here, resistance here, and resistance here. And it was a previous support right here, right? Previous support flipped to resistance, and it's been resistance ever since it went below back here in 2022. So that kind of means it's a strong resistance level. So that mostly means that it's not going to just continue to explode higher, but it does mean that we do have a new confirmation of a trading range, and that is from 220 up to 260, right? Maybe wick above 261, 23, whatever, right? But this is the new trading range until it's able to break above and do the same thing that we just saw here, break above the 382, just like with this bullish engulfing candle. So it's clearly established the new trading range. Things will probably not break down much further anymore. So if price does drop back into the 220s, I think that's a great opportunity, right? So if we add some more confluences here of this 258 range, maybe 260, is there anything else that we can see that's there for resistance? Well, um, let's go to this log scale chart, and this is the weekly chart, right? We can see that it is also breaking above the Ichimoku right here, so that could mean that it's going to flip that cloud to a support as well. So if we go to the monthly chart, we can see something here. We can see right up here that the top of the cloud does sit around 270, right? It sits around 270 or so. So, what is a possibility that we could see, like maybe this month sometime, is possibly price maybe wicking through that 260 level up to the 270s, just get a little bit overextended, but then come back down to close candles below that Fibonacci, right? So if we do that, it'll probably just get rejected if it does go skyrocket above the 260 level, right? Just don't get FOMO, don't get to be, oh my God, it's going to the moon, just because we have to realize that it is in a new trading range, which is established right here, right? So we could get a big wick above, but then price could close back below, right? So um, let's go back to this chart. So we have that, and then if we turn on the SMAs too for the monthly chart, we can also see that it's clearly getting back above the 50-month moving average as well, which was at 228, right? So this is in more confluence that it's building that base above the 220s right here, right? More confluence in that area. And now also, what's really important to see on the monthly chart is the baseline right here and the conversion line are finally flipping back to support. So the Ichimoku is becoming more and more bullish as time goes on. So that means we know the range. We know the top could get up to maybe the 270s during this month, but it could just turn into a wick, right? There could be some selling pressure to come back down. And we know that up here in the 290s, this blue line is going to be even more resistance because when we look back in time, we can see that this monthly candle, these two monthly candles, they wicked above it quite a bit. So this is going to be the ultimate resistance point. But once that gets flipped to support, as we can see with these wicks coming down, it was support for the month, right? Then it'll just be off to the races and things will be good to go back towards all-time highs and beyond, right? So, yes, this chart is looking really good now. It's getting back into the monthly Ichimoku cloud. The market structure is getting better yet. But as we can see, it's still not really 100% bullish until we make higher highs, right? And we go back to the weekly chart. The first higher high that it really needs to make is this one of 265.13. So if we get a weekly close above 265.13, then that would technically reverse this market structure for a continuation higher. But I don't think that's going to happen this month just because it looks like we're in a new trading range here, right? If for some reason we get another weekly bullish engulfing candle up to the 618, then I'll reevaluate. But it looks like this is the new trading range until we get a breakout above the point 0.5. So good things are to come, but do you want to chase this? Maybe not. But there is still some room to go to the 260s, so I guess the choice is yours. And the chart does look great. So just got to see how this week closes on Friday to determine the next levels.